So let's get into why and how to set up an LLC or trust prior to a liquidity event for an investment in digital assets. So first off, we're going to have to figure out, do you meet the gift tax threshold in your jurisdiction? Here in the U.S., that's going to be $12.92 million for an individual, or $25.84 million for a married couple. Okay, so between you and your spouse, you both get that lifetime gift tax threshold. And you might be asking, why does that matter? Well, if you're going to gift your assets into a trust, anything above that amount is going to cost you 40% in taxes, which is steep. So this is where you're going to decide whether you're going to set up a trust prior to the liquidity event, or if you're going to set up an LLC and just move it there so that you can set up an account and have the tax advantages that provides. So if you believe that your holdings of digital assets are going to exceed that amount when your liquidity event occurs, or when you transfer those assets into that entity for your estate plan, it probably makes sense to go ahead and spend the $3,000 to $10,000 now to go ahead and set that structure up. If you're less than that amount, like again, it's 12.92 if you're an individual, 24.84 million if you are married, then you could probably get away with just moving those assets into an LLC, and you can set that up for $300 to $500. Depends on who you work with and the jurisdiction that you're going to get it set up in. You probably want to set it up in Wyoming, maybe Montana, maybe South Dakota, for any of those structures, whether it's an LLC or your trust. Just depends on, again, having those negotiations and discussions with the attorney. So let's say you decide, you're going to set up an LLC because you're not going to meet that threshold, and you just want to move your assets in there prior to the liquidity event and be able to set up an account with Claver Brown and a bank account so that you can liquidate those funds and use them for whatever types of investments or upgrading your lifestyle, whatever you want to do with your capital gains, right? So that's the other piece of this. You need to understand the tax ramifications for cashing out. So have a plan, decide what amount you're going to cash out, at what price point, so that you know the exact amount. Again, that kind of goes back to, are you going to have a certain amount of assets? But your total amount of assets is really what's going to be moved into the trust, whether you've liquidated them or not. So make sure you understand that piece. It's all of your investments that's going to be moved into that estate, not just the portion that you cash out. So you've decided the amount that you're going to cash out. You understand the tax ramifications. If you've held longer than a year, you're going to be subject to capital gains, long-term capital gains. Here in the U.S., anything over $500,000 is going to be 20%. If you haven't held your investment for at least a year, then you're going to be subject to normal income tax on that investment when you cash out short-term capital gains. And over $500,000 is going to look like 37%. So it's going to be pretty steep. So you need to make sure that you're having discussions with your CPA or your financial advisor around tax mitigation strategies for that liquidity once you cash it out. All right, so you've got that figured out. You know how much you're going to cash out, at what price point. You've set up an LLC or you've set up a trust. For the LLC, you want to make sure that you have an operating agreement. And in that operating agreement, that's how you're going to move your digital assets into that entity. So this last page is going to be your contributions to the business when you start it. You can list your wallet address, the asset that you're moving in there, the amount of that asset, and then the dollar amount associated at the current date when you're transferring those assets. And you're going to get that page notarized along with the entire document. Claver Brown is the broker that we work with for crypto liquidity events. You can use Digital Ascension Group when you sign up for an account with them, and they will, give you the discounts that we've negotiated on their fees, depending on, the size of the transaction that you work with them on. So you're going to move those assets, whatever portion you plan to liquidate. It probably makes sense to go ahead and move the majority or all of the assets that you have into that entity prior to, the price appreciation, just to limit liability and exposure. If somebody were to sue you, they won't be able to get to those assets. And that's also another thing that the trust provides. So you've got your EIN number, you've got your operating agreement, you've put those assets in there, you've got it notarized. Now you're going to go to Claver Brown, you're going to use that code I just gave you, Digital Ascension Group, and they will set you up an account. And they'll ask you to submit all those documents, along with some personal information to KYC and AML. That's normal compliance that you have to go through. They're in Australia, and because of the regulations there, they're very stringent on these guidelines, and which is a good thing, right? We know that they're going to do a good job. You will have a personal broker that you deal with. You can reach out to Sam. He's my guy that I facilitated this negotiation with. It's going to take 24 to 48 hours for them to go through and approve your account. During that time, you can go set up your bank account that you're going to tie to Claver Brown for the liquidity event, or to remove your assets from their platform via wire transfer when the time comes. You'll go set up the account with them. You have to provide the EIN. You have to provide some other documentation, some personal information, again, just like for any other bank account. And while you're there, you want to have discussions with them about what the bank account is going to be used for, and the amount of capital that's going to be moving into that account when you liquidate those funds, and where the funds came from and all those things. Because if you don't, then, well, and also don't say that you trade crypto. That's going to flag them immediately anyway. So just say it's an investment account. It's for investments that you make, private investments and also investments in the stock market, and you'll be liquidating some capital and gains from those accounts into that bank account, and let them know the amount that you plan on, using Claver Brown for to liquidate to that bank account. That way they don't flag you. I see a lot of times people don't have these conversations beforehand, and their funds end up getting frozen, or they tell them, it's going to be, I'm in crypto and I trade crypto. It's still kind of taboo, so you want to make sure that when you're having that conversation, you don't disclose that. Even though when you file your operating agreement, that is definitely what you want to put in there, is that this business is in the business of trading crypto, because then you get the tax benefits of that. Once you set up the bank account, obviously you're going to have to go back to Claver Brown and put it on their platform so that it's connected and they know where to send the money when you do have the liquidity event. We appreciate all of you, and we'll see you on the next one.